Hey YouTube, we are back at it again. Today's content is very simple. The more you think, the worse you trade. Sorry for the lack of content. Past 3 days I've been extremely busy. So, and the reason why I pull up this meme is because I saw it a couple of years ago and it applies to trading. So it may help you out if you want to like take a screenshot of this, print it, put it on the side of your computer every time you trade. So I was watching one of the Tony Robbins interview, the podcast, and he said when he interviewed Warren Buffett, which is probably arguably the most successful trader slash investors of our time, and he said that what do you think that makes the best traders or investors? And Warren Buffett said that can be anybody, but I can tell you who makes the worst type of traders. And he said, yeah, what makes them the worst traders? Who are the worst traders? He said the smart people, especially the super smart people that because smart people they overthink everything. So by the time everybody else makes a decision on a trade or a position or investment, the smart individual start overthinking it. And trading naturally attracts people who are introverted and smart. And at the beginning, you kind of trade simply, even though you may be very smart, but you trade simply, you get a lot of result, and then you start adding a lot of indicators, a lot of different strategy, and you start overcomplicating it, and you get stuck in this position. So most people either they overcome it, and they at the end they realize, oh, it's actually a simple process, or they just revert back to being a little bit of a simpler gambler, and they also find a little bit success. And yeah, that's what we're gonna talk about. And today's video overall, it's going to be a trade recaps and the weekly recaps of all the trades I took from Wednesday to Friday because I wasn't able to make any videos. I had a lot of question about these two: how to spot a high probability setup, how to spot a low probability setup, and upcoming week trading forecast, and the biggest lesson that I learned this week. So yeah, those are the subject that we're gonna cover today. So I'll put it in this corner so we can come back to it later. Oh, by the time, if you find this videos helpful, please give it a like, leave a comment with a question. I have some ideas. I wanna fund a live account, another live account, not my main live account, with $1,000 and try to make it to $10,000. If you find that interesting, leave a comment down below. Let me know if that's what you want to see on the futures market. And another thing, if you want me to see to how to scale on the prop account, because right now I'm only documenting 150K a lucid trading account for anybody who's in the same position, so they can see themselves that they can pass a 50K account, see themselves that they can get a payout. And that's the only reason I'm just documenting that one account, because if I start making videos about a live account or copy trading 5 to 20 accounts, nobody's going to be able to relate to that. But everybody can afford a 50K account, and the 50K account, if you pass it and you get a payout on it, it can change your life because you can start seeing the possibility of it. So this week we got all the way up to like 5,300 on that funded accounts, but then on Wednesday I pretty much gave it all back for two reasons. I took a one really bad trade, and the second trade that I took, for those of you who know me, I usually don't put up the stop loss right away. I usually either manually exit the position, or I put my stop loss after, like a couple of minutes after I know where the price is going. And that almost cost me the account today, because as soon as I was in the second position on Wednesday, I lost power and I lost the service. Like this whole entire area, I think because of the storm or whatever, we lost the power grid and we lost the service. And by the time I got service back, I got a text from Encore that, hey, we are aware of the situation, we are fixing it, but they give me like a 3 hour window, and this is what I got on my phone. So they're like, hey, report power outage. It won't come back until 3:30. And it was around 1 p.m. that I was already in a position. I was like, oh, snap. The good thing was, since that was the account that was documenting for YouTube purposes, that one wasn't copied to other accounts. So if it was copy traded, I would have blown up like 5 accounts at the same time, even though it didn't blow up. So by the time I got the internet on my phone, I was able to go to the position and close it. But it was like within $100 or like within $50 of the account being gone. Because once you go above the $2,000, your trailing stop loss comes to 50,100. So and my balance was 50,200 something. So I was within around $100 of losing the account, but I saved it and I traded on it on Thursday and Friday, and I was able to revive a little bit, build a tiny bit of cushion. So we're gonna cover Wednesday, Thursday, and Friday trade. And while I'm doing it, I'm going to mention these how to spot high probability and low probability. So I'm not gonna make a separate tangent about that. Well, as I'm going through it, I'll show you guys high probability and low probability. And after that, we're gonna do a upcoming week trading forecast. And of course, I'm gonna mention the biggest lesson. So this week Nasdaq, I already made a video about Monday and Tuesday and Wednesday. Wednesday I didn't trade Nasdaq, which I should have stuck with Nasdaq. The only reason I didn't stuck with Nasdaq, I had two. There we go. So I had two alert on Nasdaq on Wednesday. I had an alert in here and I had an alert in here. As you can see, when the market opened, whoops, when the market opened, we didn't hit that area. Same thing when the market opened, we didn't hit that area. So I wasn't able to get any of these two trades. On the gold, the price action was very bad on gold. But the price action on silver, I thought it was going to be very clean. I thought it was going to be very clean upwards movement. We ended up getting that upwards movement, but we got chopped up. This was the trade that made me almost lose the account, which there's no point of mentioning it because it was just overall just a bad day. I should have just stuck to NQ on Wednesday. Sometimes when the price doesn't give you a lot of opportunities, that's when I go to 15 minute. If it's like a range bound day, we're just going from A to Z. On days like that, that's when you kind of want to like mark up your chart like this. And if it doesn't give you any opportunity, you kind of want to mark up the top of the most recent 15 minute, and you can call this one a liquidity sweep. And of course, this one going to be a POI. So if the price doesn't get to your POI, as long as it goes above your liquidity sweep, and then you see a massive reaction off of it, you can just get in. So that was the biggest lesson of the week. Don't just wait for your POI to be hit. If it's a range bound day, meaning we have a massive amount of people selling or we have a massive amount of people buying, you have to go to the 15-minute chart and see some sort of entry. As long as we get within your POI or within the liquidity sweep, that's good enough, especially if you see a massive reaction. That's when you get in. So let me go to silver on Wednesday. So silver on Wednesday. So the overnight session, we're going up, we're going up, we're going up. So this is what I'm thinking. I'm like, okay, we're probably going to go up. Here we got a nice inverse of this 15-minute area. So I got in and I went in heavy. I got in around here. I had my stop loss right around here. I had my take profit right here. As you can see, we got tagged out and the price proceeded to go up and left all of these highs without taking and then come back again. And then around here, we got another massive reaction from here. And this was the one that I didn't have my my stop loss. So if I had it, I don't think it would have mattered because I had my stop loss around here. We would have got tagged out anyway, but we wouldn't have lost a lot of amount of or equity on that account. This one I would have targeted somewhere in here. Of course, we lost power. By the time I got in it, the price was somewhere around here. So yeah, if I wouldn't have closed the account, we would have lost. If I wouldn't have closed the position, we would have lost the account. Yeah, 106 ticks. Yeah, that would have been the account would have been a goner. So yeah, that's how a 12-day winning streak came to an end on Wednesday. First, by me being very stubborn on really wanting to trade the silver, just because the Asia Open seemed clean. I was like, oh, we could probably gonna get it clean because I didn't get any opportunity on Wednesday. I was like, oh, we're probably gonna get a good opportunity on silver or gold, which we didn't, and that was my fault for really sticking to my guns and sticking to my bias. Oh, price gonna go from here to here. So that's why I have this one. I always leave it on, the watermark on. I leave it and it says trade what you see, not what you think. Because sometimes you can easily get stuck in this loop of like, oh, the price went from here to here, so therefore it has to go from here to there. And you get stuck in this loop instead of seeing, hey, where are we getting rejected? Where are we bouncing from? Instead of trading objectively and trading, looking at it, you constantly think of, oh, I say this, and I'm gonna think about this. So, and the strategy has to complement what you already see on the chart, not the other way around. Once you learn the strategy, and if you don't know the strategy, it's pinned on the home of the channel. Once you see it, you start telling yourself, well, I know the strategy says so and so, so I have to stuck to it. No, you don't have to. You can just see what you can see what the market does, whether if it's consolidation, going up or going down. Then you can see if does it match within the context of my strategy. Not the other way around. Most people doing it the other way around. And I always have to remind myself, hey, trade what you see, not what you think. That's why I have that over there. So Thursday, we kind of stayed away from the market. We took one trade in the afternoon on gold, and I'm glad I kind of stayed away from it. Or on NQ. Yeah, we took one trade on NQ in the afternoon, and that was the only trade we took. And kind of brought our account back. So it was here, and down to 15 minutes, and so we we were just going down. Same thing. We had a massive rejection in this area. So I was like, okay, if we go down, we correct. Once we continue, I'm gonna get in. So I got in this one position with like one micro contract, not much. And this one I brought the account back to about $100 or so. And that was the only trade we took on Thursday. And on Friday, so we, oops, if I can do this correctly, there we go. So we had these two levels here. We had this, we call this a POI. And I also had this account, this area, which is our liquidity sweep. So the price yesterday shows that, hey, we want to go down, we broke a structure, and the Asia slowly gave us a correction. And you kind of can eyeball it. When you see a lot of rejection within a POI or within a liquidity sweep, you can kind of tell that, hey, we're going to go down. So all I need to do for it to just one more manipulation before we go towards the downside. And our target was here. Nope. Take profit. So our target was here. But since I'm just trying to recover the account and just take base hit until the account comes back to life, I just took a one simple base hit. And the way I did it, I went down to 15 minute. Once we go down to 15 minute, I saw all these rejection in this 15 minute fair value gap. and we start coming closer above it. We sweep all this liquidity and we had a massive rejection. Once that area rejected, I put my 15-minute POI in here. And what I did, I went down to 1 minute. This was a very clean A++ setup. And you could have waited all week and you would have taken this one trade from here to here, 600 ticks, and you would have been done for the week. So not every day is a trading week. Wednesday and Thursday, the price action was horrible, of course, because of the CPI and PPI. Oops. So let's go back here. So you can see at 9:45 the price closed below it. Price closed above that 15-minute, closed below the 15-minute. And we have all these confluence, and we have all these low liquidities, and we have our drawn liquidity here. And not hesitating in this is very important. So we grab all the liquidity. As soon as we close below this POI, I got in here. My stop loss was above this swing, and my take profit was somewhere around here. I think I took around, yeah, I just aimed for this low, somewhere in between London and the Asia low. That's a good solid spot to take profit. So I just this one, I set my stop loss, I set my take profit. I wasn't even on the screen. I just walked away. And then of course a couple of minutes later, we hit our take profit, walked away, which I kind of regret. And what I've been implementing into my trading lately, I usually go for the base hit. That's my model with prop firms. So what I've been implementing nowadays is if we hit the base hit, which is a little bit risky because you can hit the price can hit your base hit and start reversing on you, but it just depends on the high probability and low probability setup. So this is a very high probability setup because if you see the day before we broke this support level massively and we created this liquidity area, and overnight we corrected. Once we got back to this area, as you can see, the price kept rejecting it. And then we had one more sweep, and then this makes it a very, very high probability to go grab more liquidity from the day before. So that's what makes it a high probability. What makes it a low probability setup is this setup. For example, overnight we just went up, and there's, as you can see, there's no clear area of liquidity. So we have this and this area. The issue is we came take it, we went and take out this liquidity, then we started going up, start going down, start going up, and then we just chopped around. As soon as you see the second chop, that's your sign to walk away. That's as simple as that. That's what makes it low probability. If you see two chops in a row, you walk away. Versus a Friday, clean liquidity sweep off this level and this level, and we just clean reject it, clean correction, clean close below the POI, and you just get in. So what I've been doing is I put my take profit on the home run, on like the most highest probability of the liquidity, and of course we have an hourly here, we have another hourly here, and then you can target these two areas. So you can technically put your take profit all the way down here. And what I've been doing is every time we have an area, I just, for example, let's say for the sake of simplicity, I put this one as 1 RR, and then let's say I put another one here for, let's say, 2 RR. Let's say another one here for 3 RR. So you get the idea. Once we close below that 1 RR area that you're interested in, I just drag my stop loss to that area. I don't touch my take profit. I just drag my stop loss to my 1R. Once we hit the 2R area and it's coming up again, I'm still not touching my 1R. If it comes and touch my 1R, so be it. But if it closes below it again, then what I do, same thing. I drag my stop loss to this most highest swing area or back to the 2R area. And same thing, if it goes hit our 3R area, you can either close the position or apply the same thing. Comes up, doesn't hit your 2R area, comes back down close below it, same thing. You just move your stop loss to the 3R area, and so on and so forth. And once you're over your 3R or over your 4R, then you can just aggressively trail your stop loss. But at the beginning, you're still guaranteed your 1R, your quick base hit. If you can squeeze 2, 3, 4, 5R out of it, why not? So I'm going to implement that more and more into my trading instead of just having a rigid one-to-one base hit, which is very, very, very effective. That's how I pass my funded accounts. That's how I get payouts, and that's how overall it works. And it only works on the accounts that you don't have a consistency rule on the funded accounts. If I have consistency rule on the funded accounts, which I don't like to trade those accounts anyway, then this strategy is not gonna work. This strategy only works if you have a top step account, which I don't trade anymore because of all the drama, or any account like Lucid Flex account that doesn't have a consistency rule on the funded accounts. And it also applies to a cash account. So if I'm trading my cash account, that's how I used to trade my cash accounts. So I used to go for 1 or 2R, and then I would drag my stop loss. If the price gives me more, I trail my stop loss, or I leave it at 1 or 2R, and I just gradually 2.5, and it doesn't have to be one at a time. You can do 1.5, 2.5, 3.5. You get the idea. It's pretty simple. I think that's all we did. Let me go back to this area. So what did we want to cover? Did I get rid of that? Nope, that's right here. So upcoming week trading forecast. So let's go to Forex Factory. This website should be your friend. Forexfactory.com. You go to your filter and you filter the red folders. That's a high impact news. You just select that. You leave everything be. You put it on USD. You click apply filter. And for the time, you just go to your time zone. Put it wherever you live. If you live in Indonesia, London, California, New York, doesn't matter. You just put it on whatever time that you are trading based upon. Mine is Central, so I leave it on Central, and I'm looking at it. The only issue is the Forex Factory doesn't show you the bank holiday. So this Monday is going to be Martin Luther King Day, so the banks are closed. So there's going to be very, very low probability setup or complete chop. So if today's Asia session open, be very cautious, don't trade it, or just wait until Tuesday. Same applies on Monday, New York open because of MLK Day. Don't trade it Tuesday, no news Tuesday. The price action probably going to be clean, so you can trade it. So is Wednesday, Thursday, Friday after the news or before the news that comes out. So that would be my forecast for this week. And the biggest lesson, like I said, the biggest lesson was marking out my POI and marking my liquidity sweep. And if the price gives me a some sort of entry within that range, I get in instead of having a very rigid rule of, oh, it has to hit my POI, or no, it has to hit my liquidity sweep. If the price gives you some range within that, you just get in, you don't overthink it. That's that for that. And then if you want, you can go ahead and join the community. The link is in the description. You have a lot of people that leaving their lessons, their wins, their losses, their psychology lesson. And if you want, you can just put your losses on the lesson or your wins under the wins, or just psychology question, or just a general question. People are going to give you feedback. I'm in there. I'm very active. If you have any question, you can DM me or leave your trade screenshot and ask a question. We can help out like that. And before y'all go, last week I opened a one-on-one 180-day mentorship program that's mainly going to help you out with a accountability. So I'm going to hold you accountable, go over all your screenshots, your trades, your balance, whether if you trade cash accounts or prop accounts. I'm gonna do an overview of your trades, give you live feedbacks, and answer your question one-on-one. And I'm gonna hop on the call with you and go over every problem or any problem that you might have when it comes to trading or the psychology section of it. Other than that, leave your comment below. What do you want to see? If you want to see the 1 to 10K challenge, if you want to see more of a prop account, how to pass it, or if you have any other question, leave it down below comment. Like the video if it was helpful. See you guys in the next one. Peace. Oh, the one-on-one mentorship link is also in the description. Yep, that's it. That's all I have to say for today. See you guys in the next one.